Hello, hello, hello. Happy Unemployment Thursday. How is everyone doing? Got the bounce yesterday. We're going to see if there's any follow through. Remember, non farm payrolls tomorrow. Good morning, Patrick. Good morning, Martinez. Where's Sterling? Good morning, Sterling. Sterling now finally putting in the headlines. Finally. Oh, I'm so used to this thing logging in. All the headlines scroll by the moment I log in because Sterling was in early. Oh, thank you for putting in the jobless claims numbers. We'll get to those in a second. Good morning, Royal Palms. Good morning. 4 hour close about 40. Uh, on the Nasdaq, also 4 hour close and daily close. We'll take a look at that in a second. We'll take a look at that second. We'll take a look at the markets. I mean, we got a reversal off the numbers because they're still coming in better than expected today for continuing. I mean, initial jobless claims, continuing jobless claims coming in slightly better than expected and about in line with previous, but roughly in line. Still not over that 17. Uh, what I want to say, 1700K. Initial jobless claims 207K, not below 200 yet though. So still, but the markets did not like those numbers because they're still holding up better. We have Mester speaking, we got Barkin speaking in a bit, then we got Daly, and then we got Barr. Now remember, the big thing is tomorrow with the unemployment numbers. Big thing tomorrow, unemployment numbers. We could be in for one of those choppier back and forth days. So far, we have energy still pulling back after the big pullback in crude. Mega caps turned, we were mixed going into the numbers, turning slightly negative. You can see healthcare, real estate. Let me just refresh this real quick. Healthcare now really the only major positive thing, and energy, the big negative. Com services also. Fed watch tool. Uh, Nothing. We've dropped off with the first cut now after May meeting. So we're still at the pause mode. Some of these numbers climbing slightly, but not enough to make a difference yet. Fear and greed, we're still technically in extreme fear. In terms of, I was just going to glance at Constellation Brands, but I did not see it before this live stream started. So I was going to see what that was just out of curiosity and see if there's anything said about it. But that's about it. The earnings season is we're waiting for the next one to ramp up. And there's nothing tomorrow. Levi's after close today. So we had the. Let's start with the S&P. Coming up, talked about this 4303 area being resistance, major key resistance, which we stopped at yesterday and so far this morning. Right now, we're in a horizontal channel. If we start breaking below 4277, again, everybody should be familiar with the things I do, but here's the key levels. Then I'd be looking for 4270 area and then the 4261.50. We start getting at least a 1 hour close below there, we could be retesting the lows and then maybe hold for a bigger double pattern. Remember, we got the first little reaction coming into the declining rotation zone, and on the back adjusted charts, the overhead 200, not on the other ones. We're at the bottom, you see down there. But the rotation zone's roughly the same area. So that's what I'm looking for. If we break out, now the breakout pattern, I'm still going to be watching for the support because it could be choppy. I'm still watching for the support coming in down here like we just bounced, and resistance up around this 4,300 to 4,303. We get above 4,303, same thing as yesterday, 4,320. All right, is very, very key. We close above 4,320. Even on a 4 hour basis, the odds start shifting for more follow through, that we could be coming out of this oversold condition. The Nasdaq closed above the 62.5 on the daily, and so far a pause. Now on the Nasdaq, the key level I'm watching for support is about this 14,850. All right, 14,850. We have a triple top on the 1 hour. And no, this is not a double. You can see the triple even on the 4 hour. I'd be more concerned if that was a potential double. But if we break below this 14,850, because if you're wondering if it's a fake out, the key levels, let me just change the color here real quick. All right, so the key levels. Did I change the wrong one? Oh, well, we can see it in the blue. 14,772. The next minor level would be 14,818, then 14,772. 14,726.75 would get me concerned. Because a close below that on a 4-hour basis, yeah, then I'd agree that we got a fake out move. Until that happens, I got to go with either the pause or the probability, especially in the NASDAQ, that we could be choppy. Even a slight pullback doesn't invalidate this area. You see right now we're at a pausing bar. Now, to the upside, we start getting traction above about 14,950. 14,950. I should have actually made this level here. Sorry, it was slightly off, but it's not going to change that much. It's 14,727.75 on the closing basis. 14,774 is a very key pullback area. But we break above this, start getting traction of about 14,950. Very key resistance is 15K. Very key resistance, and you could try to fine tune it with some minor harmonics, even forward harmonics from these lows to the big pausing area we just had. If we look at that, the minor harmonic and then the major harmonic. The minor harmonic is right at 15K. So not only do we have prior price action, reversal, 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 reversal. That and the 87.5 from this pullback and the minor harmonic projection. So on any breakout, above this 14,950 area, I would not ignore 15,000. Not just because it's a round number, but we got a major cluster in prior selling. You get above that, 15,047 to 15,060 is the next key area. Above that, you then officially trigger, or you confirm the double if you can close above 15,060.75. Then we are triggered then we have triggered the double. So that's all the upside and downside I'm watching for. Dow has been a little weaker, still a bounce yesterday in a channeling pattern right here. You can see right here. So that's pretty much what I'm focused on a pullback with the Dow. The Dow, remember, did not have a really strong pattern. The key level is 33,147 on a pullback closing basis. The breakdown is right in front of that 33,189. The breakout is 33,315. Not going to dwell on the Dow anymore since, according to Coco, it's a boomer index. And so we don't need to focus on it. Where is Coco, by the way? Where is Coco? Come on, we got to bounce. Where's Coco? On the short-term basis for the Russell traders, 1744. Breakout, breakdown below 1733. I'm cautious on any breakdowns right now because of cycles being at the bottom and against very major support. You see all this major support area, which I think we've chipped away at once. I think we're going to need a couple more chip aways before that can break. So, but that's why I'm cautious on the downside, because we can get some buying pressure coming in right there. VIX still elevated above 18, but if we start dropping below 18, then I'll focus more so on the continued bounce. Notes, little follow through so far, but not much. The key areas is still 107.18. If this thing's going to roll over again, your key levels at this point are 106.18. The yield, after finishing the head and shoulders, which Sterling talked about yesterday, you see coming back down just below the third target and reversing back and forth. Is there anything else to watch for? Not yet. My next key level, if we do break below, especially if the markets rally a bit and yields still roll over, is about 4.67. And then we drop below that about 4.62. The 10-2s are pausing right now with the steepening. So Would not be surprised to see a little pullback there. Dollar index still holding the rotation zone. We break below 106.15, 105.97 to 106. Crude has continued its pullback. If we close below this 83.49, going to start watching for a continued pullback on this. The next key area, the next very key area for crude would be, this is pulled back a little farther than I thought, but the next very key area would be about 79. I was targeting, you'll hear that on next week's podcast, which I was the guest on, which was recorded on Tuesday. I was watching a pullback to about 83.76 at the lowest. We've gone through that a little. So we're coming into a very key support area. A very key support area, but it pulled back a little farther than I was looking for, so it's patience mode. Natty gas, still trying to chip away at this. Watching for the breakout there. Gold, still in the crapper. I'm watching for a bounce play in gold, but then it would have to do a lot of heavy lifting before it becomes a continuation play. Otherwise, it could just bounce back to the daily rotation zone. Didn't talk about it yesterday, I forgot, but it was the non-denial, possibly Japanese yentervention, but still, they're going to have to do a lot more than that because it's already snapped back and still holding the daily rotation zone. But if you look at the 10-year yields, they've continued to climb. So I'm still on the lookout for more yentervention. But the next target is 150.32. The last little bit, if this was actually, they did not say if they did or not, but they didn't say in their last major intervention cycle that they did or not. So 147.80 is a key on any pullback to watch. Even if it bounces below that, going to watch for, see if it has enough power to snap back above that. Euro, we've returned to the daily rotation zone. If we pop above about 105.35, then I'm looking for 105.75 area. Otherwise, we don't have a strong bottoming pattern just yet. And we stalled out at that lower 25% harmonic. If we do roll over again, now we have a major cluster at 104, pretty much 104. Pound, really nothing. I'm looking for these to form a little stronger bottoming pattern so we can get a bigger pullback in the dollar index, but nothing yet. The spiders, you can see here, did not get above that 62.5. Yesterday, 423.66. The key areas on the spiders, 423, about 15, then 421.64. And then 420. To the upside, again, the same comments go. I'll be erring on the side of a choppier day unless we break above or below those key areas I talked about in the S&P. And I do watch the S&P first before the spiders. The breakout area is roughly right around is 425. And then the targets are 426.02, 427.47 target area. The Qs, which did close above the 62.5. Little slight pullback. So the first thing on the Qs would be the gap fill, of course, to 359.75. The breakout level would be above 360.53, the major breakout level, and then 361.75, and then 362.95. On a pullback, if you want to flip this around, if I want to flip this around, for wondering if it's a fake out move, and this is a minor level, 356.03, but way in front of that, 356.94, 357.86, and 358.78. We're still trading in front of those levels. So that's where they sit there. Tesla, because of course, with bad delivery numbers, we got to rally it into earnings. We did break above this 255 area. The next key area besides the gap fill, we still have a gap fill to 262.56, which I would not be, if the market can have continuous bounce today, that's the next target there. Then 266.69. Close above there 277.56, and then possibly 288.42. There has to be a lot of weakness now going into earnings to really change things from the short side at just this level. Who else have I missed here? Good morning, Connor. Good morning, Jacob. Good morning, Tony. Good morning, Alan. Really appreciate everybody turning in. Good morning, Anissa. Good day, Christoph. Speaking of a fake out, that move on the 10-year sucks some buyers in for on the 10-year, the little 1 hour. This little fake out with that was right here with the unemployment numbers that came out. Again, a little fake to the upside. I am still watching for this to stabilize and get a stronger pullback pattern. A little continued rally or a little stronger pause in the notes and a little stronger pause in the yield, of course. So, NVIDIA, just to look at some of this, not much going on with NVIDIA right now. Apple, not much going on. If it gets above 174, a little minor breakout. But I'm still watching cycles not at the top. We could see some rallies still in these mega caps. Clorox has picked up multiple downgrades after an announcement regarding disruptions due to cyber attack they experienced that closed yesterday at a PE of 108. Downside targets. You don't want to pay. Did it have a PE of 108? I'm not doubting you. I just 108. That's sort of funny. I'm sorry. To value Clorox at 108 is literally absurd. Downside targets, key areas. I'm just looking just before I even put on these. Come on. There we go. Well, all right. Well, look at this. Looky, looky, looky. I win a cookie. Here we go. You break below 127.30. I would target the cluster right around 120. Right in front of 120. And then it'd be to these 113.50. That would be the two key targets. Beyond that, if you're trying to do something longer term, if this really breaks down, you're at 98 and then 82, and then I'd come back to bigger harmonics. You know, I'd go back all the way to the last key bottoming area and all the way up. And look at this. Look at this. So you got a cluster at 81, and on the big, huge closing basis, 107.69. So you get a close below 107.69 and still use 98 as a little target area. And then the next major would be 81 if you're turning it into a long range play. But there is some key support coming in still around this 120 area. So in a short-term targets, that's what I would utilize. All right, again, that's helpful to go, even if you don't trade it, that's how I roughly set up. And then I'll go down in time frames and set up and start looking for patterns and everything else. But that's what I look for. Let's just check back in on the S&P. Still sitting right in the middle of this range. We do have some decent buying power, some decent buying reversal down here. So that's, again, keeping an area, watching that into the open. And then the selling pressure up here 3 times right there to NASDAQ. Let's take a look still. There's your unemployment number, a little brief sell-off, and we immediately are snapping back, but this is the key area to watch. I would not get concerned unless you start taking this out, especially with momentum bars and the tick starts tanking. Other than that, I have to go in with favoring the more choppier day ahead of non-farm payroll Friday. So, but anything can change, as we know. Just because I think I'm going in for that way, I'm still prepared. If there were momentum bars to the upside and downside with associated proper tick. With that, I shall talk to everyone tomorrow. Bye for now.